OPEC announced it will extend oil production cuts until March of next year in an effort to boost oil prices. But our next guest calls OPEC, and this is a quote, meaningless. That's not all he calls OPEC, and warns that the supply does not match the demand. Joining us from Chicago is Bubba Trading founder and chief strategist Todd Horwitz. You have choice words for OPEC, but this, what is it, 1.2 million barrels they plan to cut a day. Will they adhere to it? They always seem to violate their own rules.
Good morning, Adam. You know what? They never adhere to anything. That's the problem with the entire OPEC world, is that they're all backstabbing each other as it goes on. And because they can no longer hold the United States hostage, which is what they used to, when oil was cheap, they'd hold us hostage every once in a while. Now, we produce more than they do, and we're going to only produce more. So they are a worthless organization. And I won't use the choice words I wrote to you, but they're a lot worse.
What do you think about the long-term outlook for oil prices, though, and the opportunity to invest? If supply stays stable and demand sort of, shrinks, and according to Minister Khalid Al-Falih, the non-OPEC countries will agree to this, at least in the short term. We're coming upon the summer months. Do you think it's an opportunity for traders to look at the sector?
Well, I think you want to look for oil to work its way lower again. We've had a number of bursts up. We just came off about a 15% rise from 50. And I think you're going to look for, most likely this year, I expect to see in the 40s, again, before this year is over. I think that, the economy is slowing. We continue to increase supply. Demand is falling. And of course, one thing nobody's really talking about also is, the extra taxes that they're now charging in many states, one included. It is going to slow the amount of driving that's going on. So I think not only is the economy slowing with overall demand, but we're going to keep producing. So we're going to see prices come down. And I think that, the 40 level is a real reasonable, the mid 40s is probably a real reasonable place for oil to end up before it's all said and done.
Todd, I am curious about something. There was a note put out by JP Morgan that showed annualized return over the last 20 years. And oil, I don't know if I'd have the stomach for the volatility, but oil actually outperformed S&P 500 over 20 years at 7% a year, whereas the S&P 500 was 5.6%. Does that surprise you? And do you think that's sustainable going, say, the next 20 years forward?
I think absolutely not is it sustainable. I think, we do have basically in this country right now a well over 200-year supply of oil, number one. Number two, remember, oil came from, $10 a barrel and then $19 a barrel as it went up. We went through that one rush when it went from, 20 to 40, 45 before obviously going to 100. But again, at the end of the day, oil has been a great performer, but I don't expect it any longer because in my opinion, there will be a replacement. And we just have, now that we've become master frackers, we have an overabundance of supply. And considering we're going to now start producing 13.4 million barrels, I think that we're going to be in great shape. And I don't expect to see that to continue. I assume the S&P or the markets will outperform oil going forward.
All right, I'm actually going to let you have the last word on that one, and I'm going to leave it there. And as someone who's very conservative with investments, I appreciate hearing that you're in favor of the S&P 500. All the best to you, Todd.